Happy New Year's and welcome back, traders, to my market outlook on index futures for the week of January 4th. I hope you all have enjoyed some holidays, but in 2026, it's time to get back into trading. So the first thing I want to take a look at this time around is the economic calendar. It's been a while, so I have investing.com pulled up and I filtered it by just the high impact news. And as you can see, every single day we have some high impact news. And also the first thing you'll notice is that technically it is going to be the first Friday of the week, but we do have non-farm payroll. So this is going to be an NFP week. And with all the high impact news every single day, I expect us to have some big volatility, but that may not be good volatility because of non-farm payroll and all this, major events going on. We could have a broadening pattern or a seek and destroy pattern where we take out the buy side, take out the sell side, and take out the buy side, so forth. So if you do decide to get into trading this week, please be careful. Try not to hold on for too long and just take the low hanging fruit. So now jumping into the charts, I have ES pulled up on the weekly and taking a look. Last week, we did have a down week. You can see that we went down below this weekly volume imbalance, but you can see the body closed in the upper half of this weekly volume imbalance. So there is still a glimmer of hope that we will be reaching for new all-time highs. I'm still looking at this like these are relative equal highs. This is still kind of close by. So I'm viewing a lot of buy-side liquidity at all-time highs. But we could have a little bit more retracement. I hope not. Ideally, we start going up from here. But if we do go down lower, we still have this very small weekly volume imbalance. Very small weekly fair value gap that we can go to. And it lines up with 25% of this wick as well. I don't really want to see price go down to 50%. I feel like that's going to be a little too low. But 25% lining up with this fair value gap, I think that's reasonable. Now let's go ahead and jump into the daily chart. And as you can see, these highs right here, this one did take this high, but they are relatively close and also kind of close to new all-time highs as well. But let's go ahead and zoom in here. We do have a daily volume imbalance and this fair value gap. I said this was going to be my last line of defense. We did go underneath it on Friday, but as you can see, the body is closing within that weekly volume imbalance. And if we do reach for this 25% level, I think that will be okay, but ideally we start going up from here. Now above here, we have this very small daily fair value gap. So definitely keep that on your charts, but this even bigger one, I feel like this is going to be a little bit more important. I really want to see how price behaves when we get back up here. I don't want to see it offer much resistance at all. And I want to see price go for this high and new all-time highs. So if we get a closure above here, that's what I'm going to be looking for. Now moving on to Nasdaq, we have the weekly chart pulled up here. You can see all-time highs is here, but I'm not as enthusiastic about all-time highs on Nasdaq. What I'm looking at are these relative equal highs. I think this poked above here just by a little bit, but still very close relative equal highs. This is going to be the low-hanging fruit and what I'm going to be aiming for this week. Now, if you look down here, we do have a weekly volume imbalance. We did close beneath it, so this is not ideal, but what it's reaching for is this lower wick on this weekly candle. We tapped into 25% of this wick, and we did not go into 50%, and ideally we don't, but I think let's go ahead and go down into the daily chart, take a closer look. So you can see all-time highs is over here, but I'm not really aiming for that. The low-hanging fruit is going to be this daily fair value gap. And it lines up with these relative equal highs as well. So a lot of the buy side liquidity is over here in this level. So zooming in, we do have this volume imbalance, same as S&P. I don't want to see this volume imbalance provide much resistance at all. But looking at Friday, kind of an indecisive candle, kind of like ES as well, but it's closing within this daily suspension block. Why is it a suspension block? I went over it last week. We have a volume balance here and a volume balance here. So the body of this candle is suspended. And of course, we have those weekly wick levels drawn out here. It didn't go into 50%, and ideally we don't. I don't really want to see it go down to 50%, but I think it's okay if we do. I really don't want to see price go down below this low. And the reason why is because we had this big decline here and it was reaching for this order block. So then afterwards, we pretty much had this big rally up. And I feel like moving away from this order block, there's really no need to go back in here anymore. So I don't want to see this low get taken out. And this, I want to see this create a swing low. That would be my ideal scenario. But obviously, I want to see price go up from here. And this is the daily volume, the daily fair value gap I want to keep my eyes on. We went into it one time already. I don't want to see it offer much resistance. I want to see price pretty much just go through it, take out this high, go into this daily volume imbalance, and pretty much just go for the buy side liquidity like really strongly. Maybe not all in one day, but maybe we have like a little bit of a rise, and then the next day we close above and take out all the buy side liquidity. Who knows? Now, another thing I do want to keep my eye on is going to be this daily wick here on Friday. Perhaps 50%, but you don't really need to have it on your chart because it pretty much lines up with the high of this suspension block. So you can kind of just use that instead. What you can do is grade it with the 25 and 75% level. So these could be a little bit sensitive as well. So my ideal scenario is if we have a price go up above 50% and then start using it as inversion, using it as support basically, and having it go higher up, take out this high and then go for these highs as well. Okay, so that's gonna do it for me this time, guys. Remember, we do have non-farm payroll this Friday, so definitely be careful trading on days leading up to it. I think maybe Monday or Tuesday is okay, but like I said, you know, we have a lot of high impact news on that economic calendar, so just be careful. Take the low-hanging fruit. Don't hold on for too long. But please give this video a like, subscribe for more analysis like this, and until I see you next time, safe trading.